Hello and welcome to ShyStar Technology Product Introduction for AssetCross. AssetCross automates the transfer of assets between corporate books for Oracle E-Business Suite assets. AssetCross functionality. AssetCross will allow you to transfer a single asset or multiple assets utilizing the same form between corporate books. This is regardless of the currencies involved, the chart of account structures and values, and the asset category values. You can also transfer assets financially utilizing one of four different financial options, which are all GAAP compliant. You could transfer assets at cost only, perform a carryover, which is costs, year-to-date, and accumulated depreciation transfer the net book value of the asset, or an amortized net book value, which is similar to the carryover except for at the amortized net book value, the amortization flag and dates are set. You can also transfer assets life utilizing one of three options. The first option is the original life will flow with the asset. You could have the life default to the life associated with the new book and category, or you could bring over the remaining life, and this would be utilized if you financially brought over the net book value. You may choose to bring over the remaining life of that asset. You could perform full transfers and partial transfers. Partial transfers would be based off of the original asset's costs or number of units associated with that asset. AssetCross will translate your original asset values to the new amounts associated with the depreciation book in that currency. AssetCross will maintain a audit trail between the two assets involved. This is what we call a soft audit trail, which will allow you to always get back to that original asset. The history of that original asset will not be moved over with the transfer, but you perform an inquiry on that original asset to get any additional information that you may need in order to satisfy any requirements. There is a built-in approval process which is SOX compliant within AssetCross, which again will allow you to identify the owners of the two depreciation books involved. When one of the books submits the transfer process, the owner of the receiving side will receive an email notification in which they can review the results of that transfer, accept that transfer, or reject that transfer. Not until that owner accepts that transfer will anything be performed within the system. The approval process is optional. It can be turned on or off. AssetCross will reduce the risk of miscalculation of the new asset values, reduce the risk involved in incorrect data entry, reduce the risk of data integrity, and reduce the company's exposure to write-offs. Let's go ahead and look at the transfer process as it is today within Oracle Assets. The first thing we need to do is to determine the asset or assets to be transferred. We will need to gather the information about those assets and document that information. This documentation will ultimately end up in the receiving side hands in order for them to manually key in the information to create their assets. So what are you going to need to document? You're going to need to document the descriptive information of the asset, the financial information on the asset, the source line information on the asset, and the distribution information on the asset. All of those pieces of information should flow to the receiving side, and they can determine what they need to enter in order to create their asset record. And then the losing side is going to need to perform the manual asset retirement on the assets being transferred. On the receiving side, they will need to determine how to treat the financial aspect of the asset, what values to transfer over, whether it's going to be cost only, net book value, a carryover, which is cost, year-to-date, accumulated depreciation, or amortized net book value. They will also need to figure out the life treatment of the asset, whether to bring over the original life, remaining life, or allow the life to default to the life associated with the category and book that it's being assigned to. The next step that the receiving side would need to do is determine if a translation rate is required. What was the currency that the assets were maintained in prior? What is the currency that they will be maintained in? Are they two different currencies? Do I need to go ahead and get a translation rate? If a translation rate is required, the only place in Oracle that maintains that rate is the general ledger. So therefore, someone would need to go into the general ledger and extract that translation rate based off the date of the transfer and the two currencies involved in the transfer. Once that rate has been extracted and documented, someone would need to go ahead and manually recalculate what the values of the assets will be on the receiving side of the books. So taking the original asset cost, multiplying by the translation rate will get you the new value of that asset. Once the new values have been created and the documentation has been received from the side of the transaction losing the asset or transferring that asset, the asset now needs to be manually keyed into the system on the receiving side. So you need to utilize the descriptive information, the source line information, distribution information that was acquired, and financial information as far as what was acquired and then translated to the new values for your depreciation book. That information needs to be keyed into Oracle Assets. Once the additions has been performed, both sides of the transactions would need to now go ahead and create intercompany journal entries. So the side that transferred the asset, when they perform the retirement, will need to go in and relieve the gain-loss account and book that to the intercompany accounts. Likewise, the side that received the asset will need to go in and relieve the asset clearing account and book that to the intercompany gain-loss account. Upon closing and eliminating, those two sides would eliminate against each other. Let's look at that same process, but we're going to overlay the AssetCross solution on top of that process to see what gets eliminated or reduced out of the process. The first step, you're still going to need to determine what asset or assets need to be transferred. You will no longer have to gather asset information and document that information. You will no longer have to manually retire those assets. You would still need to determine the financial and life treatment of the assets being received. So this is going to be a drop-down select option within the AssetCross product. You will not have to worry about whether or not a translation rate is required. AssetCross will make that determination for you. You will not need to go into the general ledger system to extract that translation rate. AssetCross will do that for you. You can eliminate the risk of miscalculation of the new asset values. AssetCross will do that for you. We'll go ahead and recalculate what your new values are based off of the transfer date and the translation rate. You will no longer manually add this asset information into the receiving side. However, both sides will still need to create the intercompany journal entries. Okay, just the way that Oracle works out of the box and what Oracle allows you to do and not to do, the intercompany journal entries at this point in time cannot be automated. So let's move forward and just look at the AssetCross approach. What is the AssetCross flow? Again, you're going to start out by determining the asset or assets to be transferred. You are going to identify those assets in a AssetCross transfer form. You are going to determine if those assets are going to be fully transferred or partially transferred. Now in the full and partial transfer, AssetCross is set to fully transfer everything, so you only need to identify anything that is going to be partially transferred. The next step is to determine the financial and life treatment of the asset. Again, again, this is going to be a drop-down box that you could identify the financial treatment and the life treatment. And then you'll go ahead and submit the transfer request. If the approval process is turned on, an email notification will be sent to the receiving side, the owner of that depreciation book, to approve that transfer. Not until that owner approves the transfer will any activities take place within the system. So the retirement will not take place and the asset addition will not take place. So they need to happen at the same time. If you do not have the approval process turned on, immediately as soon as I submit the transfer, the process is going to go ahead and be kicked off, and the retirement and the addition will be completed at the same time. Once the asset has been transferred, both sides will need to go ahead and offset the asset clearing account, offset the gain-loss account, and book that to the intercompany accounts. So how do we get to this transfer process? Once AssetCross has been installed, it is a bolt-on to your Oracle applications. You're going to see a navigation path under Assets called Corporate Book Transfer. This will open up the forms that are associated with the AssetCross process. If you like additional information or to schedule a demonstration of AssetCross, feel free to contact sales@shystartech.com. Thank you.